Hello guys, welcome back. Uh, Today we are going to discuss a very interesting topic. One of the major assets that has rallied for the last few years, and we all know about it, is the gold. And I'm going to discuss a case study where I'm going to explain how gold is related to the macroeconomics, how it is related to the geopolitical situations, where the gold prices has been in the last 5 years, and what should we do exactly with gold going forward as an investment or going forward as an hedging instrument, right? So let's quickly go about it, and let me quickly take you through these multiple things about how to navigate the 2026 financial landscape with gold. Let's first compare with the asset class returns, the CAGR returns for gold with Nifty 50 land, which is based out of India, Nasdaq 100 and S&P 500. If you look into all of this, you would very easily find out that over the last 3 years, over the last 5 years, over the last 7 years, 10 years, 20 years, and 50 years, as well as for 100 years, gold has been a dominating asset in terms of the returns. Right. So you would always wonder why then anybody would invest in the stock market? Why would anybody invest in the land? Right. We'll come to that. We'll discuss it very clearly where exactly and how exactly we should invest. But looking at this, if you look at Nasdaq 500, right, in the last 3 years, the return has been 18.5%, whereas gold has given you 27%. For the last 10 years, the Nasdaq 100 is 17.2% vis-a-vis gold is 16%, which is very comparable. Last 20 years, it has also gold has outpaced. Last 50 years, the gold has also outpaced, right? S&P 500 also, if you compare, gold has clearly outpaced. Gold has significantly outperformed the traditional assets in terms of the volatility, maintaining a robust double-digit CAGR returns, right? So clearly, gold stands out, right? So then we are going to ask what exactly is happening to the gold prices, right? So, what are the major reasons why gold is going up as an asset? The major reason is nothing but uh, the primary reason being the de-dollarization, right? We have been hearing about the de-dollarization everywhere, right? What exactly is the de-dollarization, right? The global South nations are aggressively reducing their USD reserves. So countries like India, China, and other Southeast Asian nations are decreasing their dollar reserves and going towards local currency trade. That's what is called de-dollarization. Dollar has been a reserve currency uh, for many years, and how the countries in Asia and also in Europe are moving away from dollar. That's called de-dollarization. Now, why de-dollarization is happening? It's because primarily, if you look into the Russia-Ukraine war, in the mid of the war, around 412 billion assets, the US dollar assets of Russia was frozen by US, right? So that gave an idea to almost every other country that, hey, if at any point of time US freezes the assets, uh, the the treasury bonds that you are holding or any dollar assets that you are holding, then what exactly will happen? What is going to be the hedge against that kind of risk? The natural answer follows as gold. The second is the fear trade. There are multiple escalating conflicts around the world. It be the Russia-Ukraine war, be it the India-Pakistan conflict, be it in the US-Venezuela conflict. So multiple of these conflicts arising either in the Middle East or in Asia or in the North America or the South America regions is the reason why people have been rushing towards gold, which is considered as a safe haven. The third thing is the central bank is buying huge amounts of gold. Now this is causing a the demand and supply gap, and thereby causing the gold rates to increase. The fourth one is, again, the interest rates are going down. The Federal Reserve is cutting down on the the rates, and that is causing the gold prices to go up naturally, so right. Now, if you look into the central bank gold buying trend for 2021, 2022, 23, 24, 25, so I have given a projection of what India has bought vis-a-vis China Reserve Bank, vis-a-vis Russian Central Bank. You would see that in 2021, Indian RBI was has bought 77 trillion, 77 tons of gold, uh, and China has reportedly not bought anything. But then the China numbers are always very difficult to figure out. Russia has bought 3 tons of gold, but you see a pattern changing drastically for 2022, 23, 24, and 25, right? Aggressively, China central bank has been buying. So in 2024, if you see, 180 tons of gold has been bought by the China central bank. Russian central bank has bought around 45 tons of gold, and the similar numbers, higher numbers are there in 2025, and hence the rally in gold has happened. The shift is undeniable. India maintains a steady accumulation. China has aggressively ramped up on the gold purchases because they want to diversify into gold away from the US dollar. Uh, De-dollarization is the theme. If you look into the power players, who are the top gold holders in 2026? The natural top rank goes to United States with 88,000 plus tons of gold, followed by Germany. But the surprising third one is the IMF with 2,800 plus tons of gold. India stands at rank number 9 with 930 tons of gold, right? So this clearly shows that uh, the countries are accumulating a lot of gold. The and If you look into the percentage of reserves, clearly China and Russia and India stands out with huge percentage reserves in gold, right? Uh, Now, what are the gold ETFs that are doing in the meantime? So, by the way, gold ETFs are the largest holder of the gold, physical gold, but because for any unit they have to publish, there should be a backing gold that should be the physical gold that should be present with them. So, if you see the gold ETFs, it has been in a negative trend for 2021, 22, 23, but look at the numbers for 2024 and 2025. The gold ETFs have purchased 55 ton of gold in 2024, 190 plus tons of gold in 2025. Clearly, there is an institutional demand via the ETFs and driven by the fear trade and the rate cuts. Now, let's look at what RBI is thinking about this, right? We have added 60 plus tons of gold in 2025. There is a strategic shift to move gold from the Bank of England back to the domestic vaults. We are diversifying the forex reserves to insulate the Indian rupee from the external dollar volatility through gold, right? And that's why RBI has been aggressively purchasing gold, right? What are the big banks saying as a 2026 consensus, right? Target given by JP Morgan, Goldman Sachs, Wells Fargo are well within $6,000 per ounce, right? If you look into all the reports that has been published by the big banks, they are all mentioning there is a structural change in how the gold has been purchased by the central banks. This clearly indicates towards a different trend that altogether. uh, Parts of it also indicate towards the de-dollarization. It has been clearly called out by the big banks. Now the road ahead, right? So what are we looking at? What price we are looking towards, right? It's $6,000 per ounce is what we're looking towards. The current price of gold is 5,000, below $5,000 per ounce. And if you translate that to Indian rupees, it's 1,50,000 rupees per 10 grams of gold. We are looking towards more than 2 lakh rupees per 10 grams of gold, clearly. And this is a consensus. The psychological floor is at 4,500 dollars per ounce. And clearly, the earlier prices of 50,000, 70,000 rupees per 10 grams of gold are gone, right? So now these are the facts that I'm presenting, that there is de-dollarization which is happening in the world. There is a clear purchase of gold by the central banks. We want to move away from US dollar. There are macroeconomic trends which are showing that the gold price is going to increase. There is also the big bang consensus which is clearly showing that the gold prices are going to increase even in 2026, 2027 and beyond. But what exactly we are going to do with this, right? Because we are not going to purchase gold. We are not going to hoard a lot of gold in our portfolio, right? But the historical trend shows us that the gold has a higher return compared to any other asset class, be it the stocks, be it the land, or anything else. So what do we exactly do, right? So I'm giving you a comparison of the gold with the top US tech companies, the CAGR comparison. If you see, right, even me also, for personally, I'm holding a lot of US stocks. I'm holding a lot of tech stocks even in the Indian portfolio. So I am happy on the tech stocks. Clearly, uh, everything is changing in the world of tech. There is a huge AI investments that is being done by the Mag 7 companies. You know the Magnificent Seven, right? The Google, the Amazon, the Netflix, the Microsoft, the Teslas of the world. They constitute the Mag 7. So there is a clear AI investment happening in the Mag 7 companies, which is showing that we are moving towards a new tech. AI is going to completely change the world. That's a new technology. Is the AI bubble happening? Is it going to burst? Nobody knows about it. But I am pretty sure that the top tech companies like Nvidia, Apple, Microsoft, Amazon, Meta, Tesla, they are definitely going to provide higher returns compared to gold. Now, gold should be present in your portfolio in certain amount because you want to hedge from the external risks. You don't want to go through the volatility when the the stock market goes through the ups and the downs. Hence, gold provides a clear protection and also as a hedge to your portfolio, but nonetheless it should not be the primary constituent of your portfolio because it's very difficult to bid a certain sector or a certain growing industry uh, by having the major constituent in your portfolio as gold, right? If you look into the comparison of the gold with the top US tech companies, you can clearly see that gold has outperformed, but in a lot of cases, right, in the 5 year CAGR and the 10-year CAGR, obviously the top 20 tech companies are outperforming clearly, right? If you see the comparison, the 5 year CAGR of gold is 16.4, whereas the top 20 tech companies has a CAGR of 19.8 percentage. Similarly, it also the tech top 20 average clearly outpaces the gold in the long run as well. But if you look at the individual returns from these companies, the Mag 7 companies, this clearly outpaces the gold. So it is very, the fundamental point that I'm trying to make over here is that even the gold is a safe haven, can give you protection, can give you insurance in terms of the portfolio volatility, but clearly you should have specific choices of the equities that you want to keep in the portfolio and maximize your returns, right? uh, and this is clearly shown in the data as well. Now if you have reached this point, please share, subscribe and like the video. And let me ask you a few questions. What exactly is the major constituent in your portfolio and what kind of return it is giving? Is it outpacing the gold? And the second question from me, which you can also mention in the comment, is that what percentage of your portfolio is gold? Right? I will leave you with that thought whether gold is what you want to increase in your portfolio in 2026 and 2027 and beyond, or you want to have a diversified portfolio with both equity and gold present, with gold giving you the necessary shock absorber to the volatility, right? uh, Thank you guys, thanks for hearing me out. uh, Good day.